How are you?
I'm fine, thank you. Hold on, let me connect my camera.
Yeah. Good to see you
Hey, how are
again.
you?
Good.
What time
Oh,
is it where you are based? Because here is 3:24 a.m.
oh, that is very early. Here it's just after dinner, so 8:30 p.m. for me.
All right, all right. Amazing show, amazing show. So I'm going to share my screen and I'm
Yes.
going to start.
Excellent. Over to you, Orlando.
All right, cheers, Leka.
No worries.
All right, this one, share. All right, how are you guys? So, hold on just a second. Can everybody see my screen?
I can see it. Yes.
Okay, okay, so hold on. I do, all right, chat. Awesome. So I have the chat here. Guys, if you have any questions, just go ahead. Hi. Hi. How are you? I'm gonna butcher your name. Hi, Ki Yuan. Ibrahim, how are you? So today I want to talk about of course what I'm looking for next week. But also I want to talk about a specific trade that I took late on Friday after the US data on gold, right? Because this trade, is a great example of my entry model, right? Of what I do every single day, right? So this is my trade on gold, right? I did buy on a very strong weakness. My entry was exactly at the 1840 level, so around here. So around here. My trade is still running. Here's my trade. And as you can see, my risk versus my original reward was amazing, right? About a 5R. So that's what I always look for. Now, I want to talk about a couple of things, and if you have any questions, just go ahead and ask. I have the chat here. And now the reason that I want to talk about this is because this entry model, and this is the only thing that I trade, right? I only trade the London Open and the New York Open, and I just look for liquidity sweeps, right? And that's the only entry model that I trade. And my risk is very small per trade, never above 0.7%, because this entry model can yield 5 to 6 to 7R. On average, about a 3.8R, right? So, and with the probability of success, having backtested, I mean, and this is not out of the blue, right? I mean, this is based on data. Having backtested it with the probability of success of above 69%, this is very profitable, right? So this is why I want to talk about specifically this trade. So this is gold, right? This is gold on the 3-minute chart. So to start with this, my entries are on the 2-minute chart and on the 3-minute chart. I know that for some of you, this might seem a little gambly because these lower time frames are filled with noise and a ton of volatility, right? But it is not, right? Every decision that I take, every trading decision that I take is based on data, right? And for example, I'm going to go to a 5-minute chart because I want to show you exactly what I was looking at. So these squares right here on my chart, these are just the Asian session range here. the London session range here, and the New York session range here. This is the only indicator that I use, right? So I'm going to remove the indicator because I want to show you what I was looking at. So I was looking to buy. This market is and has been extremely bullish for a long time, right? So I was looking for buy opportunities, but I'm going to delete this too, right? And I'm going to use the replay button because this is where price was trading when I was looking at, this opportunity. So, a year and a half ago, what I would have done, I would have looked to buy, the breakout of the highs with stop losses, either below this low, but most likely below the structured low here, which is can be and used to be a little bit profit. It had a little bit of edge, right? It showed profitability, but very minimal, right? And this is what I used to do. Now, what I do now is I look at, first of all, inefficiencies in the market, right? I look for inefficiencies in the market because the market has to price itself efficiently, so inefficiencies tend to come and, price tends to come and fill these inefficiencies. Inefficiencies are imbalances or gaps, right? And I also look at the overall structure of the market, right? So in this case, I was looking at, of course, a bullish structure. I was looking at the break of the structure here and a break of the structure here. So the first thing that I look at are weak players in the market, right? Weak buyers, right? Traders eager to get in on the move, because of FOMO or whatever you want to call it, right? And those weak players in the market can be seen here, here, and of course here. So for me, this is just liquidity. Why is this just liquidity? Because normally these weak players in the market have absolutely no structure behind them to put their stop losses, in a logical place. So for example, the last low here, this shows buyers jumping into the market, right? Very high into the move. So if buyers jump here in the market, where are those stop losses going to be? Of course, that they're not going to be below the structured low. They're going to be perhaps here, right? A few pips below, etc. So that is what what is called sell side liquidity. This is, I didn't invent this. This is, some people call it smart money concepts, ICT model or whatever. But this is just, a thought process on how to read a chart based on where the liquidity of weak players is, right? Because more often than not, if you go back in historic price action, you're going to realize that more often than not, those weak players are going to get, stopped out, right? And so I look for that, right? And also, what I also look for is the last, for example, this is the last break of the structure. And here is something that whenever you start trading, this is the first thing that you learn. Whenever price breaks with a level of support, in this case, resistance, wait for the retest and get in. This is weak, and more often than not, this is not going to work out. Why? Because where are you going to put your stop losses in this case, right? There is absolutely no structure to put your stop losses other than this low. And weak players in the market are never going to put a stop loss this wide when they are trying to profit very quickly from the move. So they're going to put their stop losses on a level that makes absolutely no sense. So that is liquidity, right? So I look at that. Then I look at inefficiencies in the market. In this case, I want to show you what I was looking at. It was on the 3-minute chart. I was looking at, I'm going to use this. I was looking at this here, this imbalance right here. So I was looking at this imbalance. And the reason that I was looking at this imbalance is because here is, this is the area of demand where buyers started to jump in and created that volatile move or that break of the structure, creating that imbalance. And here we have another imbalance, if you notice, right? Here and here. I mean, this imbalance has been mitigated, but still an imbalance, right? So I look for this. And then I just, position myself below the liquidity, and hold on, I have this. So here is what I call my power buy or power sell zone. This is just a ratio of pullback. And I position myself on the mitigation of that, demand zone, right? So my entry here was at the 1840 level. So just above that, because I do want to get filled on my positions, right? Just above that, that demand zone and targets. Well, my targets were actually here. I was looking at on the 50-minute chart. I think actually let's go to the 30-minute chart. I was looking at targets above just here's where I was looking at targets, because if you look at here, all right, so one of my rules is whenever my trade runs at 1.5 or 1.75 R, I take 1 R off and I move my stops to break even, right? And that's just my rule because psychologically speaking, managing my trades this way keeps me in the zone. If you have been with us for a while, you know that when I first started here, I used to call myself a swing trader, but the oscillation on an open P&L on my position led me to make very, very bad trading decisions, right? So everything that I've worked on has landed me here. And here's where I feel very comfortable. To be completely honest, even a little bit, boring, which is awesome because, I tell everybody when you do day over day and over day and over day, the same thing, and capturing 0.5% profit, 0.75% profit, 1.1% profit, it adds up. And you only need one entry model. You just need the one entry model. The goal here is, at least mine is to optimize what I do and do it over and over and over. So I placed my buy limits here, and this is what happened. Boom! I got triggered, and the trade is running at 8R at the moment on the last portion of my position. So I wanted to talk about this because on the Bali retreat, I wasn't able to go there, Thank you, FIFA. And I didn't present this the way that I wanted. And I mean, I'm really passionate about this. I really, 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 I mean, I spent a ton of time, a ton of my life. I have spent a ton of time, in the lab, just, minding data, backtesting, optimizing, my entry model to land on something that I can do over and over and over and over and over, and just compound those profits, right? I'm going to give you a couple of examples. For example, here on the New Zealand dollar, US dollar. Now, here I'm going to use this indicator because I told you that I just trade the London Open and the New York Open, right? Oops, my battery is very low. So what I look for is this, right? For example, here on the Kiwi USD. On the Kiwi USD, right? The Asian session range, super rangy. And this is very cool, right? On the London session, we had a sweep of the Asian session highs. Now, I don't trade this because it has an edge to trade the sweep of the highs or the sweep of the lows, right? But there's no structure, right, to place my stop losses. So what I wait for this. During the pre-market, the U.S. pre-market action, price broke with the London session lows and broke with the Asian session lows. To me, this flags a bearish continuation. So what I used to do was this, right? What I used to do was this. Now, this is the 50-minute chart. And what I used to do was this. I used to trade breakouts, right? I used to trade with stop orders. So what I used to do is I used to wait for the breakout of the lows, right, of the structure low. I would put my stop losses above the structure high, and I would target, the next structure low. So, if you notice, this is just a 2R, 1-to-2 risk-to-reward ratio trade. And this is what I was talking earlier, right, about noticing that my trades used to incur in a ton of drawdown. So in this case, I would have been triggered here, right, at the break of the Asian session lows, right? But our price would have drawn down on me about 70%, right, of my original risk before, going in my direction. And because I would, in this case, my entry was very, very late or early, however you want to see it. Early in the sense that I should have entered, at these highs, or late in the sense that my entry was way too low. But what I noticed, was that momentum, most of the times, above 80% of the times, momentum dries up very close to my entry, right? And never hitting my targets. And when momentum dries up, in this case, if my entry or if my setup, my trade was this one, right, at this moment in time, right, my trade has absolutely no edge, and I would still hold on to that trade because my targets were all the way, at the next lows. So I started to figure out that what I was doing didn't work. So in this case, on the Kiwi. I didn't trade this. I don't trade the Kiwi because I'm not profitable trading this market, but this is a great example of what I look for, right? Pre-market, US pre-market broke with the Asian session lows and the London session range, right? So this to me flags a short opportunity. So what I'm going to look for is this. I'm going to thicken this chart out for you guys. And what I look for is this, right? Where are the weak players? First of all, where are the weak players? You can see that the weak players are here. Why? Because these are the weak players that tried to go, or that got in short at the break of these lows, right? Where are their stop losses going to be positioned? Probably here, probably here. That really doesn't matter. So that's the first thing. That's the liquidity that I look for to get swept or swept. I really have a hard time with that word. So this is the liquidity, right? Then I look for, the demand zone, in this case, supply zone, that created the break, of the structure of these lows. And here we have it. Right? I'm eyeballing it, right? So actually, no. So here we have it. And in this case, my sell limit would be just above that liquidity and below the supply zone, right? With my stop losses above the structure high in this case, and my targets would be right here at the structure lows, which yields about a 4R. So, which one is better, right? Which one is better? Which one is better, right? A 2R that is never going to achieve targets, or a 4R that, if you're new to this, you might think that it's a little bit gambly, but I understand that, because it was hard for me to change that chip in my mind, right? That mindset to sell into strength and to buy into weakness, right? It's scary at the beginning. It's scary at the beginning, but when you have data backing up what you do, it's not scary at all. And because of the good risk-reward ratios that you can get with this entry model, you can compound. You can have great months just by risking 0.4, 0.5% per trade. Now, this is another example on the Nasdaq. No, this is the Dow. I'm sorry. This is the Dow. So this is the same thing, right? This is the New York session right here. So and this market is absolutely bullish, right? You have the sweep of the lows here at the London Open. This was a great buy opportunity, but again, I don't trade that setup. I don't have the data backing up trading sweeps of the lows, right? But I'm going to work on that. So we have the sweep of the lows at the London Open, right? Taking out the lows of the Asian session range, right? And then all throughout the London session, we have a very strong rally, right? So I wake up. Let's imagine I wake up at, for pre-market, right? And I see this. So where am I going to try to buy? Or where is the true level that I should look for buys? In this case, it was not that clear, but it's the same thing. Let's imagine that we are looking at price at, I'm actually going to use the replay button again. Let's imagine we are looking at price here, right? Now, these lows Again, same thing. Here we have the break of the structure, and we have a ton of deep buys on that previous broken highs, right? So if price comes back to that same level, we are going to get, again, buyers and again, more liquidity building up. So, so in this case, I would look for, again, I would look at, first of all, at the structure of the market, right? And to look at the structure of the market, we need to go to a 5-minute chart, because looking at the structure of the market on the 1 minute, on the 1 minute chart, that's a no-go. So basically what I look for here, so we have the highs, another high here. And this is the trap, right? Here we have the high, and here we have the low. So this break of the structure, and here we have that demand zone. In this case, I would have place my buy limits here again, with my stop loss. Again, there's two school of thoughts in this case. I mean, in this scenario, I myself always place my stop losses below the structure low when I'm looking for longs, or above the structure high when I'm looking for shorts, right? The other school of thoughts is placing your stop losses just below the zone, which yields, incredible risk to reward ratios, but the percentage of times that you get stopped out by trying to get those very high risk to reward ratios does not make sense vis-a-vis the profitability of the entry model if you don't do that. So basically, I here would have, this is what it would have looked like, and to the tick, and of course I would have gotten out here and missed on the entire rally. This is another thing that I'm working on, and gold is a good example of that, because I just closed 75% of my trade around here for 1.5% profit, and I'm letting the rest of it ride. That's something that that I didn't used to do very often, because I'm still getting used to trading, the small time or the lower time frames during very volatile times. So, and because of my rule that when my trade runs at 1.5 R or 1.75 R, I take 1 R off and move my stops to break even. And the reason that I do that is because data shows that it yields profit on the long term. But letting runners, it's always a good thing. Guys, do you have any questions? Can you hear me?
Yeah, thanks, Orlando. That was great.
Yeah. So Anton, hi, how are you? So I'm going to go through what I'm looking for. What's the session indicator name on TeleView on trading? Just look for session, trading session ranges. There's a ton of indicators there. So what I'm looking at for next week, let's have a look at the US dollar. Dollar bill, yo. All right, so I'm still bullish on the USD, but having said that, I'm going to remove this, and hold on. I'm going to remove this. Now, what do you guys look? I mean, what do you? I mean, this is the thing, right? I might be bullish. My bias on the USD might be bullish, but that is not going to stop me from, taking, high probability shorts. So, may I know what's indicator? For everybody asking the name of the indicator, just go and look. I mean, there's look for Asian session range. So here's a 10-minute chart on the DXY. This is the US dollar currency index, right? And here's what I'm looking at. So what I'm looking at here is this, right? Here's the last sweep of the high. So this is the last break of the structure to the upside. Then we have this lower high, failure to print a higher high. Then we have this break of the lows. So breaking with these lows is kind of bearish, right? Now, again, flaggy. After the break of the lows, I don't trust that. I don't trade that. So what I am looking for here on the DXY, let's go to a 3-minute chart. Again, I mean, it's not gambling, guys. All right, so, yeah. And I'm doing this with you because normally I do this tomorrow, on Sunday for me. But here we have a good inefficiency or an imbalance in the market. Here, this is just liquidity. So, yeah, I would love to see a or a mitigation of this. Perhaps even here to take shorts on the USD. Very possibly looking for shorts on the USD. Should the DXY run towards the 104.80 to 104.87 or so, right? That would yield a very nice short opportunity, but I don't trade the DXY, of course. So let's have a look at the Euro USD. Same thing, right? Even though, no, the pound, yeah, the pound is looking phenomenal for dip buys. So this is the thing. Just have a look here, right? The pound showing what seems to be a flag. I mean, if this flag breaks and price continues to rally, more power to flag traders, right? I don't do that. I don't trade flag. I just have the one entry model. I just trade that, and that's it. No, I don't look at anything else but that. Here's that high. So, right. Should the DXY rally towards the 104.80, I think it was 104.80 to 104.87, we should be looking at pullbacks on the pound USD, right? So first of all, I would look for these lows getting taken out, right? The rejection here on weak players trying to buy the retest of the previous broken highs, creating more liquidity. Then, boom, those traders getting stopped out. And here's where I would love the buys on the pound. So basically, from the close, I would look for a 50 pip pullback on the pound to start looking for longs. All right, remove drawings. Let's have a look at the USD CAD. USD CAD, same thing, right? Same thing. Short on the USD by trading the USD CAD. Would be exactly the same thing. All of these highs, just liquidity, and here is that around here. I'm eyeballing it, guys. I mean, What I'm going to do, I'm eyeballing it right now because I haven't really worked on the chart. But I'm going to record a video, and send it to the Telegram group. So basically here would be a nice place to look for shorts on the USD CAD. Again, what I would have normally done back in the day, and I say back in the day, which is really not back in the day because it was like a year and a half ago, I would play some sell stops here, stop losses here, and I would completely get triggered and get stopped out on that liquidity sweep. So, yeah, that's what I'm looking for. US dollar shorts, US dollar shorts. So, on gold, because I'm already long, right? Because I'm already long. And of course and this is the thing, right? The only reason that I'm holding on to this gold trade during the weekend is because I am extremely well positioned in this buy, right? I am extremely well positioned. If my entry would have been here, I would have definitely closed all my position on Friday. But because I am really, really well positioned, and because I already took 1.5% profit on this trade, right? I am more than willing to take on some hit on a pullback towards this level, 1846.5, to add to this gold long. Yeah, so this is what I'm looking at. Guys, if you have any questions, this is the time. And I don't know if my camera is working. It's not, right? No, it's not.
That's okay, Orlando. We saw your just like an image. But thank you very much. That was very informative.
Yeah, you're welcome, and you're welcome, everybody. I'm very passionate about what I do. Extremely passionate, and if I can leave you with a piece of advice, it's going to be a little bit of a rant, so hold on. You only need one entry model. To make a living out of trade, to be profitable long term, you only need one entry model, one pattern, or whatever you want to call it, and 3 markets that you focus on, right? Also, focus on the times of the day that you place your trades. Because when there's no volatility, your positions lose a ton of edge, and maybe they can even get to EV negative or expected value negative if you let them run right on no momo. That's something that I've realized by mining the data that I have, my historic trades and everything that I do on Excel. But yeah, focus on the time, because if you are a swing trader, it really doesn't matter, right? Because it's a completely different animal, in the sense that if you focus on swing trading, right, opportunities, you have to wait for a long period of time, sometimes even months, for your setup to develop, and the window that you have to take that trade at an optimal price, or optimal level, is quite short, right? But momentum really doesn't matter that much, or daily volatility doesn't matter that much when it comes to swing trading. But if you're day trading, right, it does matter, and you need to focus on when volume jumps into the market, because if you are a day trader like me, what you are is it's a volatility hunter, right? You are a volatility hunter because there's absolutely no way that you're going to be profitable long term without volatility when you're day trading, right? And this is another piece of advice. For example, if you start, I mean, if you take trades late in the London session or late in the New York session, those trades are not going to have a clear edge, and on a vacuum, that particular trade might be even unprofitable in the long term. So again, you have to go to the lab. If you want this, you really need to go to the lab. You really need to go to the lab. You really need to do the work, because it's simple. Once you understand the math and the probabilities behind what you're doing, it's super simple and it's boring, right? It can, I mean, and whenever you feel that what you're doing is super repetitive and borderline boring, mate, that's when you're, I mean, that's when you get there. I mean, that's the zone, because there's no emotions behind what you're doing. Two, you understand completely, the math and the probabilities behind what you're doing. And because you focus on one single entry model and 3 markets, you understand completely what to look for, where to look for, what time of the days to look for that. And you understand also that, you might get stopped out, I mean, a few times, but it doesn't matter. So emotionless trading and, repetitive and boring trading is extremely good. That is where you have to, I mean, at least that's where I have found my zone, right? And this is just, from personal experience, guys, because I have been all over the place, man. And when I first started, I had 3 screens with 11 markets per screen, and Paul, he's a hell of a bencher. I mean, I wouldn't be here without him, right? He's the one that taught me everything that I have put in place psychologically wise. So big shout out to Big P. So guys, I mean, do the work. It's super cool, it's amazing. I mean, I really dig it because maybe I like numbers, but more importantly, I love to see my results after long periods of time of being on the lab. Journal everything. I mean, journaling your trades. It's not only whether you win or lose a trade or what market you traded, or it's no, you have to journal every single thing about that trade, the time of the day, the entry model that you use. Was that entry model optimal? If you have a checklist, I have a checklist of my entry model, right? There's 4 things that I look for, right? Sometimes there's only 3 things that check the checklist on a trade that I take, but I take it, right? It's not 100. I mean, it's not, but I'm sorry, 100% optimal, but it is, a high probability setup still, right? But because I journal everything, I know, and after that, my needed data, I know based on the probability of success after, I'm talking about, a big sample size, right? I know that, for example, I know that taking a suboptimal, and when I say suboptimal setup, I'm talking about 3 checks on my 4 checklist, right? On gold, I know the probability of success of that particular scenario. I know, and so I know how to reduce my risk when I take those entries in this market to be aligned with the risk that I take when I take optimal trades in this market. So I don't take the same risk percentage on every single trade. It all depends on on the data, and knowing that. All right, so we are. I'm sorry. So let's wrap up, guys. Thank you for joining us. I really dig doing this. I wish we could have more time. But if you're interested, just talk to the team, and I'm more than willing to do a special session. Just talk more about what I do, show you the numbers, etc. So thank you, Lenka. It was awesome talking to you too.
Thanks, Orlando. Great
Yeah.
preso. Thank you, everyone. It was great to have you all here. And we'll see you again next week. The show is going to be on again on